Hey, what's going on, everyone? Today is September the 24th, 2022. We're going to talk about a couple of stocks that's going to crash now ever since Jerome Powell and the Fed has raised interest rates another 0.75%, 0.75 basis points. There's a couple of stocks that this article goes into that they're trying to insinuate that it's going to crash, that prices are going to go down. And we're going to see what is their methodology, what is their thesis on to say that. And then we're going to look at the chart for ourselves and kind of see from a long-term purview if that's the case, because the chart is already going to let us know how the overall market is feeling about these stocks. So if you guys appreciate my videos and my content, hit that like button, share the video, also subscribe here to the channel. I'm only going to do one price prediction for one of these 5 stocks because I already covered one of them. And since I'm going to talk about it here, I'm going to update you all on the price prediction again for that one stock. But the other ones, we're just going to look at them, you know, from an aerial view, from a long-term perspective to see whether or not those stocks are going to crash as well. All right. So real quick, here's the article. It's come from Insider Monkey. All right. It talks about 10 stocks, but this article only gives us 5. Okay. Now, it also gives us Ray Dalio's guesstimate on how far stocks are going to go down. He thinks that stocks have got another 20% to go down in price. Now, a lot of stocks have already gone down that much. You know, some been down 60, 70, 80%. If those stocks go down another 20%, then there would definitely be penny stocks, right? Now, let's look at their methodology on how they think certain stocks are going to go down or crash after the Fed has raised interest rates. All right, so check this out. To determine their methodology, or to determine which stocks are going to crash, they have looked at high growth companies and companies that operate in the consumer discretionary sector. Now, according to them, whoever wrote this article, if the Fed continues to raise interest rates to slow down the economy, then they think growth stocks are going to underperform, especially those that have high debt to equity ratio relative to their industry will suffer the most. Now, I know you all may be wondering, well, what in the world is debt to equity? Well, if you guys go to Investopedia, you guys can see that debt to equity is a ratio that is used to evaluate a company's financial leverage and is calculated by dividing a company's total liabilities by its shareholder equity. All right. Now, going down further into Investopedia, you all may be wondering, okay, well, what is a good debt to equity ratio? This goes into that question. What counts as a, quote, good debt to equity? Well, it depends on the nature of the business and the industry for one, but generally speaking, debt to equity ratio below 1 would be seen as relatively safe. So anything less than 1 would be safe, whereas values of 2 or higher might be considered risky. Companies in some industries such as utilities, consumer staples, and banking typically have relatively high debt to equity ratios. Note that a particularly low debt to equity ratio may be a negative, suggesting that the company is not taking advantage of debt financing and its tax advantages. So it's kind of like mixed. You really have to do research, which is why I don't pay attention to a lot of this fundamental analysis. You're like digging into, you know, debt to equity ratio for a particular company. Then you got to think about the industry that they're in, and then you got to consider, well, if they got a low DE ratio, are they really taking advantage of leverage? Is that a good thing or a bad thing? See, it's open to interpretation. Like your thesis, your explanation as to what it means for this one fundamental analysis ratio, it's asinine. Like what you think is going to be different from what somebody else think, and how can you truncate that into what the value of the stock should be? Is irrelevant. I'll just pay attention to what people are buying and selling. That's it. Now look at this though. What does a negative DE ratio mean? If a company has a negative DE ratio, it means that it has a negative shareholder equity. In other words, the company's liabilities exceed its assets. In most cases, that would be considered a sign of high risk and an incentive to seek bankruptcy protection. Yeah, they're over leveraged. That's what that means. So if you ever see a DE ratio in a negative, that business may in fact begin to file bankruptcy because they got too much debt and their assets don't overweigh or overpower the debt that they have on their books. So in order to eliminate the debt, you got to file for that bankruptcy. All right, so let's go to this article again. The first one we're going to look at is Roblox. You guys can see that the debt to equity ratio is 1.8. This definition from Investopedia tells us that anything 2 or higher might be considered risky. Well, Roblox has 1.8, so that's pretty close to 2. All right, so let's go ahead and look at Roblox. Now, I did a price prediction in Roblox on September the 15th right here, and I was looking for the price to go up, right? And I'm gonna keep it real, I'm gonna keep it a buck. One day it went up, got rejected around 46, and ever since then price collapsed, completely fell down. So yeah, I don't like how the market in Roblox traded, so I'm going to get rid of this. And obviously the market is telling us that yeah, it may even go lower because the market did not capitalize off of this last move higher, which was right here. It didn't capitalize, it didn't sustain that move. So not only did Roblox not sustain this last up move, we're also making lower highs, which is not a good thing. So outside of this, it did not go correctly. And I told you all, us seeing the market in Roblox break this $38 level to the downside is an emphatic, yeah, we need to let it go. So that's 15.5% loss right here on September the 19th. If you were to get on the last trade of yesterday though, 21%, all right? It happens, it goes that way. You're not going to get everything 100% correct in your prediction. Now let's go ahead and look at this on the monthly time frame real quick, okay, because this is where I'm really seeing the weakness, and the article is telling us that yeah, Roblox could crash, and the monthly price chart is definitely giving us that same depiction, especially in the next 6 days and 6 hours. Next week is going to be real important for the stock market as a whole. I'm just going to keep it real, keep it a buck. It's going to be real important to see the market recover from a lot of the negative trading that has occurred and prices going down. We need to see some life come back into the stock market, and we may just see that next week. But right here on the monthly chart, Roblox is weak. You guys can even see on the 3 months chart, it is giving us some weakness here as well. Okay, the 2 weeks chart, you guys can see every 2 weekly price bar, market goes up. What happens the next week? Yeah, it comes back down. So this tells me that there's still some weakness. No one really wants to come in and buy Roblox right now, so we need to anticipate price continuing to go down. Now this is the last hope really for us to see the buyers come into the market of Roblox right here. I'm gonna keep it real. We see the market in Roblox break this level, which is around $34. Yeah, we're gonna come back down to these lows here. Okay, just get prepared for it. Just let you know that now. Because given how much weakness came into the market, given how the buyers have not been able to sustain price and it continues to go down, we need to get ready for that. Okay, so I'm going to look for the market in Roblox to continue to go down in price. And we're going to go ahead and drop this price prediction on Roblox. Okay. And we're going to hold as long as price in Roblox trades below this $44 level, we're going to consider Roblox is going to go lower. Okay. Now, how low? Well, this bottom portion horizontal line is where I'm looking for the market to go. The next level would be right around here, which is around 30. That's my first price target. And you guys can see that gets us around 16% movement in Roblox there. My second one's going to be around 28. It's around 21%. Then my third one is going to be around $26.25. Okay, so that is Roblox. That's how I'm going to look for the market to go. And these other stocks, I want you all to look at their DE ratio real quick. All right, so we did that for Roblox. Okay, now look at these other stocks that this article goes into. They have Broadcom. Okay, look at their debt to equity, 1.88. Now remember, Investopedia is telling us that any value of 2 or higher might be considered risky. Okay, so Broadcom has 1.88, which is nearing that 2-point threshold. So let's look at the chart here. And I'm just going to look at this on the monthly chart so we all can see it. We're in a downtrend. The last 2 months as well, even in Broadcom, is giving us that weakness too. So the next area for us to see Broadcom come down towards would be here around 450, definitely down here around 420. Okay, so yeah, I can see weakness in the market in Broadcom. Let's go ahead and look at this next one. Euronet worldwide. Look at that debt to equity ratio, 2.04. Look at this stock. Okay. So yeah, I wouldn't even be surprised to see the market run down to $70. That's going to be the next area, and then possibly all the way down to 60. So yeah, this market is particularly weak as well. You guys can see over the last couple of monthly price bars that this stock is in a downtrend. Okay. So we may actually see Euronet come all the way down to this trend line here, which is another fall of about 50%. Now, Ray Dalio is looking for the market to fall like another 20, which in this particular situation would take us to $63.75, which you guys can see is right around here. So yeah, that's possible too. But yeah, this one definitely is weak. So now let's look at Booking Holdings, Bkng. Look at that DE ratio, 2.36. 2.36, massive debt. Let's go ahead and look at this one, Bkng. Look at that, that's definitely weak. Yeah, this is the 3 months chart. Oh yeah, I know a lot of people is in the market short in this stock. You guys can see it right here, the last 3 months, and now even on this one, we're seeing the price close. I'm not even thinking that Booking.com is going to hold this level. Look at that. We break this level in Booking.com, yeah, we're going to come all the way back down to $1,440, possibly even all the way down to $1,200. Now, this is where the market came during the pandemic. So yeah, it's possible that we can even see it come all the way down there. You see that? Now, even though we may see Bookings.com like go down 20%, you guys can see that the stock is still in an uptrend though. So let's not, like, even though people like to play on emotions and fears, that's why I only pay attention to the chart, because we can see Booking.com fall 15-16%, right? Come down and grab the stock on this trend line and begin to go back up. But if you listen to someone, if you read articles, they'll tell you that the market is crashing, that we're going to hit a depression, a recession, and Booking.com is still in an uptrend though. And we can still see it fall 16%, but this is where the market would be buying the stock right there. But we had to see it hold here first, and then the market would begin to go up. So yeah, it is weak though. Booking.com is anticipated to go lower. Just need to see it hold that trend line though. All right, let's go to the last one, which is Cloudflare. Look at their debt to equity, 2.47. So this one may even be worse in terms of price going down. So you guys can see that this trend is already broken in Cloudflare. We already broke that, and we broke it on this 3-month price bar. Okay. And not only did we break it on this 3-month price bar, the price even came back up and tried to see if it could trade above it over the last 3 months. And you guys can see that it failed. Okay. So yeah, the market in Cloudflare could not even trade its price above this level. It got rejected, and now price is going back down. So yeah, this one is weak as well too. So just a quick look. You guys can see how fast it is to anticipate where prices are going to go, all by looking at the chart. Your eyes will become more familiar with where people are buying and where people are selling. And that is how we should be acting when we look at price charts. By us seeing Cloudflare get rejected up here at $80, even down here at 70, tells us that we should not be buying the stock. More people sold Cloudflare on these monthly price bars than they did buy. Okay, so that's it. I've updated you all on my Roblox price prediction. You guys can see what it is now. Looking for the price to go down. It is acting the same as these other 5 stocks. I want you all to understand that we will get days to where the price is going to go up. Like, I get it. But the longer term trend, the weekly time frame, 2 weeks, monthly time frame, is how I'm playing this prediction here. All right. Now give me your thoughts. Which stocks do you think is going to go down? Which stocks do you think has a high DE ratio? Do you even see one that has a negative DE ratio? Let me know in the comment section. Make sure you maintain profitability. And as always, trade different.